Today, we disrupt the beverage industry. Pretty great day. Sparkling filtered water, sweetened by a blend of cane sugar, pineapple juice and honey, fresh ginger root, lemon and lime juices and spices, all natural. High fructose corn syrup, caramel color, phosphoric acid, natural flavors, caffeine. You tell me what the future of the beverage industry looks like.
What up, HyperChange? Welcome to another episode. Today we're going to talk about Reed's Ginger Brew. And if Reed's Ginger Brew is successfully transitioned to being Reed's 2.0, and why, if they have, that means the company has 10-bagger potential. To summarize, Reed's Ginger Brew has been an underappreciated growth story in the natural food sector of the stock market for some time. Why does the stock market not like it? First of all, weak oversight, no corporate governance, missed profitability and growth projections, and way too much debt. But a couple years ago, Chris Reed, the CEO and founder of Reed's Inc., brought in a couple beverage industry heavyweights to start turning around the company. Also, about 6 months ago, the company totally revamped its board of directors and is quickly on its way to fixing its corporate governance issues by implementing new management, new oversight. This is all great news. Let's start with the history of the company. The first bottle of Reed's Ginger Brew was brewed in a Venice Beach apartment in Los Angeles by the founder Chris Reed back in 1986. This was the culmination of 90 different recipes, 2 years of tweaking to get the perfect ginger brew before he launched the first commercially brewed beverage product in the United States, Reed's Original Ginger Brew. Ever since then, the company has been growing organically. Now they're an almost $50 million business, one of the leaders in the natural soda industry, and I think a very exciting company and potentially compelling investment opportunity right now. Reed's is not just ginger brew. In fact, ginger brew is only about 35 to 40% of their sales. Over time, Reed's has both launched and acquired a portfolio of natural soda micro brands. They have Reed's Ginger Brew, Virgil's Root Beer, Reed's Kombucha, Butterscotch Flying Cauldron Butter Beer, which is even in the Harry Potter movies. Pretty cool. They have quirky, weird things like China Cola. They even make ginger candy. But regardless, the bulk of their sales come from Virgil's Root Beer and the extensions of that product line, like Virgil's Cream Soda, Virgil's Orange Cream Soda, and then another big chunk of their sales, about 35 to 40%, come from the flagship Reed's Ginger Brew. Unlike the sodas that dominate the market today, Reed's uses a fundamentally different technology to create its products, and this is my favorite part about the company. They are, first of all, vertically integrated. They brew the products themselves. Chris Reed is like the Willy Wonka of beverages. He's there every day making sure it tastes perfect. That's why I like buying Reed's products, because I know Chris Reed has taken the care into brewing an awesome ginger brew for me. I don't really think I could say the same for this. The way Chris Reed did R&D to discover how to make this ginger brew was look through old presidential cookbooks and discover the drinks that the presidents were drinking were these gourmet fermented ginger brews made with natural pineapple juice, spices, lemon, lime. So we decided to give it a try, and that is the birth of Reed's Ginger Brew. And his products are all fermented in big vats with natural ingredients versus Coca-Cola, who's literally just putting water and chemicals together and then making it carbonated and selling it to you. These are fundamentally different. One is gourmet, one is crappy. That's what I want to make clear. Reed's use of fresh, high-quality ingredients, I think, cannot be understated and is the reason why this company, I think, is at the sweet spot of the food industry. Let's face it, consumers are getting more and more educated about what they put in their bodies by the day. The more you learn about what's in a bottle of Reed's Ginger Brew, the more you love it. The more you learn about what's in a bottle of Coca-Cola, the more you hate it. That's very telling. Although Reed's didn't go public till 2006, they tried to go public for 5 years. We're really lucky because that means they have a massive trail of financials that we can check out. And despite what the market will have you think, Reed's has actually been a compounding growth machine. Since 1999, when they did $5 million in revenue, they've almost 10x that level. They only had 1 year where they didn't grow, and that was in 2009, right after the '08 recession. And even then, revenue only fell 1%. So through thick and thin, the Reed's snowball has continued to roll, and they've continued to generate more and more and almost record revenue every year for the last 15 years. So very impressive track record of keeping the growth up. The market would tell you they'd love for that growth to be faster, and so would I, but I think the growth has actually not been that bad at all. The big disparity has been that Chris Reed has promised faster growth, and therefore the growth that he does deliver is always looked at as a disappointment. Frankly, I want to take this time to say, never put out guidance. Reed's Inc. Never put out guidance. Don't even say, oh, I think we could grow this much next quarter, or we might do this, or it might look good. You're just setting yourself up for failure. Just report the numbers that you report and have people analyze them objectively, because when they do, and you keep posting 15, 20, 25% growth, the market is going to love it, and they're going to start to value this like the growth story it is. But if you keep saying that we're growing at 30% and keep posting 25 or 12 or 15, everyone's going to be pissed. Really simple to just set up and manage expectations here, and I think half the problem with Reed's is over. Anyway, that was a rant. The elephant in the room is Chris Reed. He makes projections, he misses them, he's the beverage industry visionary, but he's also not the greatest CEO. That is finally changing. As I said, he's brought in these two new leaders, beverage industry heavyweights, who have streamlined the company, and that's actually showing up on the bottom line. Last quarter, Q3 2016, Reed's was able to produce positive operating profit, and they were significantly dropping their delivery expenses, which has been a huge headwind on profitability. And so they're actually finally doing the things they said they were going to do. This never happened. So I think we're setting up for a very bullish 2017 where a lot of the dirty work is behind them. That being said, Chris Reed has continually promised that they will upgrade their plant, which is going to significantly expand their production capacity, but it still hasn't been done. It keeps getting pushed back. They need to get that done and prove to shareholders that they can execute on something of that caliber before they win back trust in the market. But if they do execute and they do win back that trust, then I think the valuation has a ton of room to run. And I think what people miss is everyone, if you ask someone who's familiar with Reed's, almost 99% of them will say Chris Reed is the problem. I actually 100% disagree. He is the biggest asset this company has and maybe one of the greatest visionaries in the beverage market right now. His knowledge and expertise of fermentation, the way he can come up with different beverage products and constantly innovate and do it in a natural way, unparalleled in the beverage industry. He is a huge asset who has the potential to create multi-million-dollar product lines perpetually because of his brew making skills. I think Chris Reed is not the company's biggest weakness. He's the company's biggest strength. He just needs to surround himself with people who are good at things that he's not, like accounting and managing expectations. And then I think we have the perfect formula to allow Chris Reed to brew beverages full time and take this company to the next level and really displace Coke and Pepsi. So is Reed's 2.0 real? Has the company fully transformed, and are they going to be this profitable machine? Or are they going to keep growing slowly and never make a profit and be the Reeds they always are? We don't know. It's too early to tell. This is why the stock is still down in the dumps, because the market still does not think this is Reed's 2.0. But I think there is a chance that this is. The profitability last quarter, the new board of directors, the COO and CFO showing an impact, the launch of the stronger Ginger Brew product, which I'm drinking right now, as that rolls out nationwide, enhances their SKU lineup. There's all these good tailwinds occurring at Reed's right now. All they need to do is execute. I haven't even told you guys the most exciting opportunity that Reed's has times a million. Natural soda fountains. They have created the industry's first all-natural soda fountain. It was said this couldn't be done. You have all these preservatives to allow you to have a soda in a machine. This is why Coke and Pepsi dominate that space. It's a hyper profitable business versus selling a glass bottle, because when you sell a fountain product, you're selling a bag of concentrated syrup in a box for $80, way cheaper shipping per dollar in revenue than this glass bottle. And that is why fountain is the biggest opportunity for Reed's right now. For the past 2 years, Reed's has been working with an unnamed fast casual restaurant to bring its natural soda fountain to the market with this partner. If this launches, Chris Reed has said this is a potential to drive $1 per share in earnings alone for Reed's. I believe them, because if you do the math on how many locations, how many revenue per location, and the gross profit, the fountain business has the potential to earn Reed $5 or $10 million just from this one deal. But can they execute on it and actually successfully implement that fountain and realize the revenue profitably? Who the hell knows? I'm not counting on it, so I wouldn't value that piece of the business. But my point is, if they can execute, get their glass bottle business on track and meet demand, successfully launch this fountain product, we are looking at a really profitable, really exciting company that is going to be able to start paying off its debt to, like, that 10 or 12 million in debt they have could get paid off in 2 or 3 years if they streamline operations. I think Reed's at 50, 60 million in revenue can be doing 3 or 4 million in earnings. That's why with a company that's trading at 50 million, I think looks so cheap if they start really getting their shit together. To sum it up, I think Reed's is kind of like a little bit of a frustrating story because they always have so much potential. They're always at the cusp of realizing this greatness, but it's always like 1 quarter away. But I think one of these days, and I think that day may happen in 2017, it's not going to be a quarter away. It's going to be the quarter that just happened. You're going to see that profitability. You're going to see them pay down debt. You're going to see this company more professional. And at the end of the day, because of their vertical integration, because of all their brands, and because of the untapped potential for Ginger Brew to go nationwide and globally, if I was Coke or Pepsi, I would be banging on Reed's door to buy them out almost every single day. This is a no-brainer acquisition candidate. If you could buy Reed's at a 50% premium, you would still be paying less than 2 times sales. Coke and Pepsi are trading for 3 and 4 times sales and declining revenue. Reed's could 10 times its revenue in the next 5 or 10 years if they can just figure out production. Yet they're valued way cheaper on a per revenue basis right now. This makes no sense. The market is pricing in almost zero execution for Reed's, and it's basically looking at them like, oh, well, maybe someone will buy them out and that's the value you got here. No. I think the company can turn itself around, start pumping out several million in earnings, funding that into getting bigger, successfully launching its fountain, paying off all its debt. Then all of a sudden we have a company that could do 100, 150 million in revenue, produce 10 or 15 million in earnings. What's the market cap then? I don't know. You tell me. But I think this is a very exciting story. We're at potentially the biggest inflection point in the company's history with the new board of directors and the new management team. Chris Reed is a visionary in the beverage industry who has not gotten his time in the spotlight yet, even though I know he deserves it. The pioneering he's done with fermenting these natural products versus these GMO fossil fuels that everybody's drinking now is like, amen. I think as an entrepreneur, I have tremendous respect for Chris Reed, visionary in the beverage industry. I want to see you take this to the next level. Reed's could be a $1 billion company if you guys figure out your operations and successfully launch the fountain. Let's do it. Reed's 2.0, if it's successful, is a 10-bagger from $4 a share where it trades today. That's my humble opinion. This is HyperChange. Kick back, drink a ginger brew. Let me know what you think.